As we talk about the state of the overall global economy, we really need to look at it through various prisms. One of the key prisms is, of course, the challenges which exist now. There are conflicts which are on. This has been a persistent problem. But perhaps the global economy, from a positive standpoint, has gotten out of the nightmare of COVID. There are new opportunities and perhaps new challenges when it comes to artificial intelligence. And of course, there is a factor which we can't forget about at all, which is climate change. Gita Gopinath joins me now for a very special interview, the Deputy MD of the International Monetary Fund. Thanks very much, Gita, for being with us. It's wonderful to speak to you once again. You know, when we talk about climate change, we actually face it right now as you and I sit here in Delhi. It just seems that the monsoon has shifted, the rain patterns are unpredictable. We've seen more rainfall here in Delhi than we have in a long period of time for this particular month, perhaps a new record. When it comes to the global economy, or perhaps even India's economy, how do you quantify the impact that climate change is having?
So hi Vishnu, it's always a pleasure to join you. Climate change is a real big risk to the global economy. And if I look specifically at India, I would say, in terms of the risks to the outlook for India, which we see as fairly balanced, but one of the big downside risks is climate related and the weather shocks. And we're seeing that in terms of rainfall, the volatility of the rainfall, the difficulty of predicting that rainfall, and the implications for harvests, for rural incomes. It's a huge factor. So we've looked at Asia as a region as a whole, and you see that the increase in temperatures that we're seeing in Asia is higher than the world average. For India specifically, if you look at the period from 1950 to 2018, temperatures have gone up by 0.5 degree centigrade, right? And that has real consequences. The costs of the climate disasters that we've seen starting from 1980 onwards has been around 0.5 percentage points of GDP per year. And our expectation is that over the next decade, that cost will be about 0.3 percentage points. So this is a very serious and, a threat that the world faces, and a lot of action is needed on that front, including from India.
What action do you expect from India in terms?
So in the case of India, of course, India is also looking to grow and raise per capita incomes and raise livelihoods. So there is an important, a bunch of decisions that have to be made. But we think that a package which, for instance, one subsidizes renewable energy, has a coal excise tax, and has a carbon pricing scheme. If you do that combined package, we think would be able to deliver the transition, the energy transition that's needed without compromising growth too much. So that package would be very helpful. Now, a lot of investment is going to be needed to make the climate transition happen. We're talking in terms of trillions of dollars for the world, even for emerging and developing countries. The public sector is not going to be able to do that. Like 90% of that has to come from private investment. And therefore, having the right climate policies in place to be able to signal to the private sector that this is the direction of travel, and also the public infrastructure that goes along with it, is going to be very helpful to bring in that private sector investment.
It's a time-honored question, but it really needs to be asked once again. Who pays for the technology transfers that you're talking about? When we spoke in Marrakesh, we spoke about this as well. We spoke about the restructuring of international banks, particularly when it came to giving funds to countries which needed to help move them towards climate change technologies. Are we any closer now in deciding, who pays? Because a lot of this is very expensive. Green hydrogen, for example.
Yeah, now, all of this is very expensive. And again, to be super clear, countries are going to have to rely on private investments. They're also going to have to rely on their domestic resources for the vast majority of that investment. The aid or the support that's coming from international institutions will play a part. It'll play an important part, but it is not going to be the big part of the story. We are seeing more measures being taken now in terms of helping with risk sharing between the private sector and the public sector. So you have a bit of, the government provides some sort of base support, some collateral support right at low levels, so that you can have more private sector investment. So anything that can be done to catalyze more private sector investment would help. The multinational development banks are certainly helping in that regard. The IMF is helping countries by providing budgetary support for investing in many aspects, including on their climate mitigation and adaptation strategies. This is a whole new facility that we created a few years ago. It's called the Resilience and Sustainability Trust. Right now we are lending money to about 20 countries, a total of around close to $10 billion. We have another 30 countries that are in the pipeline. This, we hope, will catalyze other kinds of investment, but it is absolutely critical to get the private sector to invest in climate change.
Before we look at other issues, I just wanted to ask you another quick question on India. We have huge ambitions of becoming a developed nation, but it's not just GDP growth alone which is going to ensure that that happens. That GDP growth has to be fueled by jobs and job creation. How does that remain a key concern, and are there any numbers which you feel India needs to do in terms of job generation annually?
So India has done extremely well in terms of the headline growth numbers. At 7% growth that we have for this year, it makes it the fastest growing major economy in the world. And if you look at the last couple of decades of growth, the last decade of growth, I would say, growth has averaged around 6.6%. But if you look at employment growth, it's been lower than 2%. Which is a bit of a different story from most other countries that you track in the G20. So certainly India's growth has been much more capital intensive. There's been improvements in productivity, but much less in terms of hiring a lot more workers and creating a lot more jobs. So the question is, what will it take to change that? There are some things that have to be done in the near term, some that will require acting on now, but will pay out later. So in terms of the near term, I think firstly it's very helpful to improve the ease of doing business. We see that in states in India, like Gujarat and Tamil Nadu. We see that there is much more interest in investment there. That's the way you get private investment up. It's tied to the business climate. Foreign direct investment is more attracted to these states. For the labor market, implementing the labor market codes that were passed by the parliament, very helpful to get more labor market flexibility. Removing trade restrictions is going to play a very important role. Public infrastructure investment, which is already happening, more of that will absolutely help. But to make this a medium long-term growth story requires more investment in human capital and in skilling of workers. If you just look at India's workforce in terms of the number of years of education, it's much lower than compared to its peers. So investing in raising the skill level of the country is going to be absolutely critical. Also then in terms of the agricultural sector, raising productivity of the agricultural sector, very important to be able to move workers out of agriculture. So it's going to take a multi-pronged approach. The numbers are large. You're looking at the need to create between now and 2030, between 60 and 148 million jobs. You can't do that by just targeting a few areas. It's going to require broad-based job creation across manufacturing and services.
When you talk about skilling, that's obviously very important. But then there's the challenge of AI. Now, I use the word challenge, others might use the word opportunity, but in a country like ours, large agrarian population, where manual labor is so important in so many regards, if we're talking about job creation, doesn't AI represent a huge threat?
So AI has both its challenges and presents opportunities, right? From the threat perspective or from the challenge perspective, I think what is important to keep in mind is that we had this wave of automation in manufacturing that then reduced the labor intensity of manufacturing. And now generative AI, the new generation of it, is making services more automated, which then of course also has its implications for jobs. So I think that is a real risk, not just for India, for the world as a whole. Now, for India specifically, given that the vast majority of its workforce is still in agriculture, the impact in a sense is going to be lower. So our estimate is that about 24% of India's labor force is exposed to AI, of which 10 percentage points is basically, we're at risk of displacement from AI. So these are smaller numbers. I think the question is, what are we going to see globally around the world once you have AI adoption happening, and whether we are at a risk of having more polarization in the world? I think, what we have to recognize is that different countries' preparedness for adopting AI is at a very different level. So I would put India is at about an intermediate level of preparedness, and the area where it really falls short is in terms of the human skills that are required to be able to benefit from this technology.
You know, we've spoken about the India story, which obviously is relevant for us as an Indian broadcaster, but the Indian economy falls well within the world economy, which faces so many challenges, not least of all because of the conflicts which one faces. The Russia-Ukraine war continues. We have a rail crisis in West Asia. In terms of the overall global growth story, how do those continue to remain fundamental concerns?
Yeah, they are fundamental. They are absolutely some of the biggest risks that we face to the global economy right now, which is what's going to come from escalation of conflict. An escalation of conflicts in the Middle East will raise oil prices, could raise oil prices, and that has inflationary consequences for all countries, and also in terms of the cost of living. That's very damaging. We're already seeing effects in terms of shipping costs. You know, for example, India's exports are now being rerouted away from the Red Sea to going around the Cape of Good Hope. That is raising shipping costs, and that is contained at this point. But if there's any escalation, that could be much more costly. But more generally, we are in an environment where political tensions are higher. There is a reassessment of the benefits of economic integration of the kind that we've had for the last 3 decades. There is an increase in trade protectionism, and all of that tends to increase the cost of living, reduces productivity, makes it harder for emerging and developing countries also to continue to grow and raise per capita incomes.
In fact, that was my final question, protectionism and trade protectionism. How does that, it's at one level been a fairly positive growth story globally, but then trade protectionism is something which keeps coming up as an area of concern. Where does the world stand, in that regard, and what are some of the trends and patterns that you see?
We are certainly in an environment where protectionism is growing relative to in the past. So if you look at the number of new trade restricting measures that have been put in place in 2022, that was 3,000, 2023 another 3,000, 2019 that number was 1,000. So we've seen a 3-fold increase in the number of restricted trade policies. Now, it is understandable to some extent, given the pandemic, given the wars we've seen, that countries are saying, well, we don't want to be just focused on efficiency and buying from the cheapest source, but we want to look at resilience too. And so there is some of those considerations that are playing a role in terms of trade policies in countries. But that said, the problem is this is a slippery slope. We are used to having lived in a world where countries worked together multilaterally following a rules-based trading system, that was the WTO. And now it seems like many more countries are going on their own and coming up with their own independent approaches to trade policy. So again, I think a plea from the IMF is that we return to the table so that we can have a multilateral rules-based approach. That will require, thinking through how do we deal with national security issues, how do we deal with, uneven playing fields and the fact that some countries have provided industrial support for a longer time and so on. So there are, I think, relevant grievances, but it's best addressed in a multilateral framework.
Gita Gopinath, wonderful speaking to you. Thank you so much for spending some time with us. Thanks very much.
Thanks, Vishnu.
Thank you. Great.